Hello, everyone. Joshua Hayes at BigWaveTrading.com. We're just going to focus on the SPY analysis this weekend. The last 2 weekends, I've been able to give quality swing trade ideas. This weekend, I do not have that following the sell-off on Friday. At the end of the video lesson, we'll review the last 2 swing trades that I've given out publicly to everyone. If you're happy with those results, I do this every single day at BigWaveTrading.com. We have swing trades almost every day when we have uptrends. When we're in downtrends, obviously, we don't just force trades to force trades. We stick to day trading. But now that we're trending higher, we've had a lot of swings that have performed just like ARHS, just like CEIX. So that is available. But unfortunately, this weekend, none that I can publicly give out. I have one on the speculative side, but it is just not safe enough just to blindly give it out. So let's get to the market. The SPY, it has found resistance right at the 200 simple moving average. So on this chart, I want you guys to realize, in case you're not aware, all that matters to me is price. The secondary indicator that I track is volume. Everything after that is tertiary or quaternary. It's just added bonuses. So the chicken money flow here, this is a great indicator, but I'm never going to make a trade decision strictly based off of it. Same with MACD, TSV, and the TTM squeeze. It just helps confirm my price and volume analysis. So with that being said, now that we found resistance at the SPY 200 SMA, which also happens to line up with the downtrend line, if we connect the highs in 2021 with the 2022 highs, we can see that we have found resistance right below the 200 SMA and that downtrend line. On top of that, if we look at this level here, once support, then became kind of resistance, then became support again, then became resistance again, we are basically at that level. So you can see here, fighting around this area, back below it, try to get back above it. Now here we are again. So we have a confluence of lines here with this resistance support horizontal level, this downtrend line, the 200 SMA. So no surprise that we found resistance here. Now, I personally thought that our pullback would start at the 100 SMA, which if you draw a horizontal trend line here would be support on this bar, support on this bar, resistance on this bar, a resistance zone that then should have acted as resistance at that 100 SMA. But instead, we just blasted right through it. That's a bullish sign. So keep this downtrend horizontal line and this downtrend line, in mind, because I just don't want to show that right now. So on top of that, I wanted to let everybody know that at no point since 1950 have we ever had a market sell-off. I guess it's going to just keep putting those on there. Okay. You know what? Keep that horizontal line and downtrend line, in your mind, but I'm going to delete those. So just to let you know, there has never been a decline of 20% or more in the S&P 500, where we then see 50%, which is this line here, of the rally taken back to where in that same bear cycle, you hit new lows. So by us getting above this 50 Fibonacci retracement line and taking back 50% of the move of this decline, history suggests 100% of the time you never see a new low. Let me repeat that. 0% of the time after a decline of 20% or more in the S&P 500, following a retracement of more than 50% of that entirety of the decline, has the market ever rolled over and made new cycle lows. Can it happen? Absolutely. This is stock market. If you think something can't happen that's never happened before, I just want to remind you of COVID 2020. Broke all the record books on the way down and then on the way back up. Broke them all. Everything. Going back to the 1800s, throw it out the window. Rule book's broken. So, with that downtrend line, history suggests we are not going to see another lower low. So we should be looking for pullbacks to get long, especially in the long-term portfolio. Now, everyone, I made it very clear, when SPY hit 400 and closed at or below 400, I started back into my long-term portfolios that I sold off in 2021, or 50% of that I sold off in 2021. Went 50% cash in late 2021. Started buyback at SPY 400, started buyback at SPY 380, and the ultimate game plan was a close at SPY 350 or lower. I was going to load with 50% of the remaining capital back into the portfolio, and then if we did this move, figure out how to piecemeal my way back to 100% in the long-term portfolios. Never got SPY 350, and we've done nothing but VRAMP. So guess what? I'm sitting with 33% of my cash in all my long-term portfolios. Just sitting there in cash. So where am I looking to round out those long-term portfolios? First off, before we get to there, I also run quarterly portfolios. They have been in cash the entire year. This is the first quarter where I've reconstituted the quarterly portfolios. I have my new leaders that I want to focus on for the next 90 days. I am willing to buy these trades in my quarterly portfolios now. However, only if they're around the 21 EMA. If they're extended to the upside of the 21 EMA, I don't want to buy them. Unfortunately, with this most recent quarterly portfolio reconstitution, everything like the SPY is extended from its 21 EMA. So, quarterly portfolios, putting them back to work this quarter, but I need my entries or no entries. Now, the next quarter in November, 10 stocks, 10% of my capital in each, 90-day hold, full stop, which means letting it ride for 90 days, back to the way they were. That's how I'm operating on the quarterly side. End of day swing side, you saw CEIX, you saw ARHS. If you follow me on social media, you see that I day trade almost every single day, still implementing the break-even stops. Those go away on October 1st. 1 year down, day trading, and the educational account will be over. We'll go back to trading normally. Expect a lot more intraday trades. But on the long-term side, which I'm more concerned about here, I want to buy pullbacks in this tape. Now that I already knew back here we were bottoming. So that's why when we bounce here, following the CPI and PPI data, guess what I did? I started to go back to work a little bit more in the long-term portfolios. But it was only with 10 to 20% of the capital, not 50%, and I didn't go in all of them. Then the market took off without me. I was hoping to get a pull to SPY 370. Then I was going to do that load. Then as it started to move, I was like, okay, I'll take SPY 380. Then right around here, I realized I'm starting to get enough thrust signals, enough evidence, a lot of divergence, a lot of positivity in my ratio charts that I'm never going to get SPY 380, 370, 360, and I still don't think that. So you'll remember in the last video where I'm looking to get long, but let's look at some other levels for the long-term portfolio. So just to let everybody know, the very first stop to be aggressive is the 21 EMA. We get below the 21 EMA, come back above the 21 EMA, feel free to go all in, TQQQ, SPXL, or UDOW, or URTY, and just let's say that there's a tail right off 412.63. Your stop goes at 412.62. So that's a way to be aggressive with it. Now, I can do that with the leveraged ETFs, but for my mega big caps, I need to see pulls in either the mega caps that I love, you know, Apple, Amazon, Google, Ford, stocks like that, or I need to see the SPY come and touch the 50 SMA. I would love to see this market pull back to 395 to load all in 100% of my remaining account capital. Not 50%, not 25%. 100% of my account capital will be put to work if by some miracle we can get the SPY down to the 50 SMA. So, giving you my game plan, making it very clear. Long-term portfolio buys, I give them out to all members on the annual and platinum or annual and quarterly side of big wave trading. I give all quarterly portfolios to annual and quarterly members on the platinum side of big wave trading. Everybody knows what I'm going to do before I take the trade on my end. So before I actually even take the trade, I tell you exactly what I'm going to be buying. I actually just put out the quarterly portfolio names. So if I was going to buy the quarterly portfolio names just at the market on Monday, members already have the names. I haven't even entered the orders yet. And I'm not, because I told you it's the 21 EMA work. But next quarter, people get the trade ideas. CEIX, you guys got the trade before I took it. ARHS, I gave you guys the trade before I set up the orders on my side. And that's how I do it on my end. So the entire game plan is given out. Will it or will it not work? I don't know. That's why the number one rule of bigwavetrading.com is always cut your losses no matter what. There are no exceptions except for in long-term portfolios. But I only buy mega cap blue chip names in long-term portfolios or high-quality ETFs or leveraged ETFs. I do not mess with speculative names. You're not going to see, let's say, what was a hot GCC? You're not going to see this IPO or GCT. Sorry. You're not going to see GCT in my IRAs. Sorry, it's not going to happen. So that's just the way that goes. But with SPY, I'm looking at the 50 SMA. That's where I plan on doing a lot of work. But I want to see, is there any other levels to work with besides that? So let's get rid of this Fibonacci retracement level. Let's delete that. Now, let's take the Fibonacci retracement level from this low to this high at the 200 SMA. Does anything line up with the 50 SMA? It sure does. The 50 Fibonacci retracement level. Okay, so I have the 50 Fib here. I have the 50 SMA. So 395 to 400, the 50 SMA is going to probably curl up. So 395 to 400, fingers crossed, I can get those I can get those long-term portfolios all in. I like confluence. I like to see it line up. However, if the market is really strong, the most we can expect it to pull back would be the 23.6 Fib. That happens to line up with the 21 EMA. If not, there's the 38.2 Fib, which happens to line up with the downtrending 100 SMA. By the time the 100 SMA starts to flatten out, it'll be right around these levels. So the Fib levels line up with the 21 EMA, the 100 SMA, and the 50 SMA. So there's 3 levels to look for support to build for the next leg higher. So now I want to start checking anchored VWAP levels. I do anchor. Actually, let me get rid of that. So we know these levels here. They're on the chart. We'll erase those. Now I want to do a Fibonacci projection based on this recent move. Sorry, grabbed the wrong tool. So let me find the Fibonacci projection. So I'm just going to go from this recent high to the low to the recent high. I always look for the 100 move. So worst case scenario, based on Fibonacci projection, I can expect to move from that move, a 100 Fibonacci projection, 375. That's as bad as it can get. Now that being said, obviously we could do, multiple other levels. If you just want to do it from here to here, connect it to that low, to that high, you can see here that we do 409. So there's other ways to look at that. But Fibonacci, to be honest with you, based on what I just saw there with the Fibonacci projection, that doesn't help. I don't see anything to help me out there, except for that Fibonacci projection happens to line up with the 410 thesis. So now I want to draw the anchored VWAP from this low. Where does it line up? Oh, lines up with the 50 SMA. Also, lines up with that Fibonacci retracement level. So there we go. We've got all of that lining up. We've got the 50 fib, which should get met by the 50 SMA, which should get met by the anchored VWAP. If they all confluence, I have a tough time always saying that word, at that level, that would be a great support level to get long. And just to let you know, there's a mini resistance level right there using those recent highs that we then break out of. You can see it's a battleground zone here, escape velocity break here, gap recovery here, breakout above the gap recovery. So this whole 400 level has a resistance line, anchored VWAP, 50 SMA, and a 50 Fibonacci retracement level all around this area. So you guys know, if we get to SPY 400, I'm all in on my long-term accounts. So that's that with the SPY analysis. Pretty detailed. You know exactly what I'm doing in my long-term and quarterly portfolios. Sorry that I don't have any new end-of-day swing trades for you guys. And my day trading career is still too young. So, to end this video, let's just review the 2 stocks that I've given out the past 2 weeks and how I'm holding them and still trading them moving forward. So CEIX was the first public trade idea given out to everybody. Once again, to let everybody know, my methodology, when I get a signal, I want to get long with a good to cancel by stop at 63.01. Limit offset in hot markets of 1%, rounding up in strong markets to like 63.10 if I really want it. But in this tape, due to liquidity and volatility, 63.01 is my stop and my limit. My risk personally on the trade to position size correctly was the dollar amount I'm okay risking from 63.01 to this low. Now, if you want to be aggressive on the trade, obviously, you just risk to this low. This would have allowed for a bigger position size. Members of Big Wave Trading also know if the stock gaps up above 63.01, price, last, bid, and ask, the trade is paused, and you call it on intraday only if it dips below 63. And per my rules, you got to wait for a close below 63 and another hammer or trigger signal before you call the trade back on. If it does not gap up, you are more than willing to get long at the market, risking to this low or this low. The next day, CEIX opened at 62.13. You could have been long at 62.13. I got long at 63.01. So already, you could have gotten a better price than me. The stock has done nothing but work since getting long. The stock is now currently up over 16% since getting long. Where are my trailing stops? So first off, after this day, right here, I'm taking profits. Anywhere from 10 to 20% because it's extending on strong volume. It extends a little bit more. I take some more profits. It extends here. I'm taking more profits. Now, if you're not a psychopath like me because you have so many shares, I literally have trailing profit stops all the way down below each candle low. That's a lower low, all the way down to this low here. You could also have a trailing profit stop at every level down to break even, 63.01, making sure you never go red on any part of the trade. Or you could use logical levels. A profit stop here, a profit stop here, to me, a profit stop here, and a final sell stop right here. I guess that would be a sell stop too. So 1, 2, 3, 4 two trailing profit stops, 1 break-even stop, 1 final sell stop. And on extensions, you take profits. I'm still long CEIX. CEIX, my final stop on the position currently is 1 cent below this support level. ARHS was a new long signal last weekend. Earnings winner. Bullish hammer candle. I explained in detail the trade. Always looking for this movement. Same game plan. 813 was my good to cancel buy stop. 813 was my good to cancel buy stop limit at Interactive Brokers. I use Trader Workstation for my end of day swings. I also have an E-Trade Pro account for end of day swings. Risking to 751. I take 813 minus 751, divide it into whatever you're okay losing. If it's $10,000, you position your share size based on that. If it's 1,000, you do your share size based on that. If it's 100, share size based on that, and so on and so forth. It did not gap up. You could have gotten filled at $7.99, front running me because I got filled at $8.13. Following day one, a very strong move. You guys know what I was doing. Taking profits, trailing stops at each level below. Now, logically, you could sell a third at the market, have a third stop here, and a third stop here. The next day, ARHS extended. What was I doing, guys? That's right, selling another 10%. Profit stop, sell stop, final sell stop. Shook me out of some of it for a profit stop. So far, so good. So just to let you know, I went ahead and took more profits off because of the overall market condition at the morning on Friday, but there is real no reason why. I am a madman. I have a good to cancel sell stop, profit stop here. I have a good to cancel sell stop here. I have a protective stop here, and my final stop is here. So on this position, I currently have 1, 2, 3, 4 trailing stops. Now, why do I have a stop below this candle? Look at the volume. It's above average. Let's see if CEIX. CEIX. I personally have a trailing buy stop here. But now, if I only had, let's say, 5 shares, would I put one below this level? I sure would not. Why? Below average volume. Now, let's say I had 5 shares only of ARHS right now. Would I put one below this candle? I sure would. The above average volume. If I had 5 shares, it'd be 1, 2, 3, 4, 5. And that's how I would do this. All right, guys, if you learned something, do me a favor. Seriously, guys, I beg of you almost at this point. Help me out, man. Leave me a comment. Tell me what you ate for dinner. Tell me what you had for breakfast. Tell me that you're watching. Show me some love, guys. I've given you guys 2 20% trade ideas from the entry to the post-signal highs the past 2 weeks. I'm going to continue to do that moving forward, but I need to see some more love. I run a website for the long-term, quarterly, swing, and day trading portfolios. I only charge $600 a year. Websites all over charge $1,000 to $5,000, and I see people complaining all the time. And yet I have people that still try to fight me over $600 a year. I don't get it. I don't get it. But at the very least, can you guys do me a favor? Thumbs up, subscribe if you haven't, comment, and I would love it if someone would share these videos to your friends. If you have anybody having trouble in the stock market, send them this video. I love you all. Aloha.